I will let, of course, our panelists introduce themselves, and we can then get started. I don't need to introduce myself again, but I'm Tommaso Astazi, Policy Director at Blockchain for Europe. Thank you for that. And today we are going to talk a bit about MiCA, of course, as we have done for the last few panels and discussions. But this time we're going to take a bit of a global point of view, a global perspective. We have done a lot of work, of course, in Europe, and this is obviously the reason why Blockchain for Europe exists in the first place, right? When the European Commission first started thinking about MiCA, that is when we decided that it was probably the good time, a good moment to launch such an association that could represent the interest of the blockchain and crypto space in Europe and be part of this legislative process that brought us where we are today, so almost 1 year into the application of MiCA. We've talked a bit about MiCA, we've talked a bit about what does it mean, all of the different rules for stable coins. We've taken a bit of a stock-taking exercise on this first year, but now we also want to hear what are other jurisdictions doing. Have they been looking at the European Union with interest in a way that they maybe want to do something similar in their own jurisdictions, or have they taken very different regulatory approaches? And if they have, how do we somehow get to that convergence of regulatory approaches, which is very much needed in a global industry like ours? That's a bit of the flavor of the panel, but I'll stop there and let our panelists introduce themselves, introduce maybe also the type of the perspective that they will bring and why, and then we can get into the conversation. Thank you. Ben?
Hi, Ben Bowden. They've billed me as a regulatory expert. Well, I did come second in the quiz, so maybe that's my qualification for that. I'm a regulatory lawyer. I've been in Europe for a couple of years, and before that I spent a lot of time in Asia and Singapore, so I've some experience of that world.
Great, thank you. Lavan?
Hi, I'm Lavan Thasarathakumar. I'm a senior advisor in the digital assets and blockchain practice at Hogan Lovells, and I also sit on the board of Global Digital Finance.
Thank you. And last but not least, we have Chris Land. Chris, you want to say hi in a few words and why you're here today?
Yeah, sure. Good afternoon, everyone. Hey, everybody. I'm Chris Land. I'm staff director for the U.S. Senate Banking Committee's Subcommittee on Digital Assets. My boss, Senator Cynthia Lummis, has been leading on digital asset policy in Congress in Washington, D.C. since she was elected in 2021. And hopefully we will have some new legislative products that we can deliver to the world in the next few months. And I'm glad to be able to join y'all for a few minutes.
Thank you so much. Really, really appreciate you being with us. And actually, maybe we get started from Chris. You mentioned actually that you started working when Senator Lummis was elected in 2021, which I believe is just some time before when you yourself actually came to Brussels, if I'm not wrong, for one of these conversations that staffers from the United States Congress were actually holding all over Europe. And we were very pleased to have the opportunity to invite you and your colleagues to our offices to organize one of these conversations. And it's interesting to start from there because back then, MiCA was already being discussed. We were almost at the end of the legislative process, so we somehow had an idea of what MiCA was going to look like, what the main principles and criteria were going to be. And back then, the United States, well, we all know that there was a bit of a lack of regulatory clarity, right? And so it was really interesting to have that conversation back then with you and your colleagues, because it really felt like you were in this process of trying to understand how other jurisdictions were going to move on digital assets regulation. And well, then fast forward to 4 years later, what can you tell us, Chris? Like, how has the conversation changed from that moment to today? And yeah, well, if you can give our audience a bit of an idea of what to expect coming from the United States.
Sure. I remember that visit to Brussels. I think it was February 2023, right after FTX collapsed. It was quite a dramatic and memorable trip in a lot of ways. But it was a pleasure to meet with Blockchain for Europe, and it really warm hospitality. And I can't thank y'all enough for hosting us. Honestly, I have a lot of thoughts about this question. Legislation in the United States is very, very, very hard. in the U.S. Senate, you have to get 60 votes on any major piece of substantive legislation to pass. That's the reason the government was shut down for a month and a half, is because there was just no path to passing the bill to fund the government. So we have to get 60 votes. That's the first threshold. Second threshold is normally major pieces of legislation have to run this policy development process that can sometimes take from 3, 5, 7, 10 years. And crypto has kind of been on an accelerated timeline because of how fast the market has grown. So we've done pretty well in that box. The other box is the political dynamics. Crypto in the United States cuts in very different ways. It's not really it doesn't cut along like neat Republican or Democrat lines. It's kind of a squiggly line, and that's kind of made it difficult to kind of figure out like what the coalition would look like to pass legislation. Honestly, but the thing that really like broke things open in the United States was kind of the shifting political dynamics in Washington, D.C. And I'm not just talking about President Trump. I'm talking about the digital asset industry in the United States spending, hundreds of millions of dollars in campaign races all throughout the country, taking down the chairman of the banking committee, Senator Sherrod Brown from Ohio, spending a great deal to support both President Trump and Vice President Harris at the time. So a lot of the tailwinds we're having and enjoying on crypto in the United States is a direct result of a lot of the political involvement that has been done by the digital asset industry. And we're glad that we have President Trump, who's a big digital asset supporter in the White House. We have a Republican majority in the House and the Senate, and that's enabled us to, kind of really do what Senator Lummis has always intended to do, which is to pass a comprehensive market structure bill. So I think it's mostly due to the political dynamics that we are where we are today. And an update on where things are, we're very hopeful that we'll be able to get legislation out of the banking committee before Christmas, and have it considered by the full Senate in Q1 of next year and become law probably in March or April of next year and signed into law by President Trump by March or April. So we're kind of on the 1 yard line, as it were, to borrow an American football term, but we're not quite there yet, but we're very, very, very close. So
we're not at the touchdown line yet, but we're getting close to it. And that's great to hear. Thank you so much, Chris. Well, let's hear it then from Ben and Lavan. First of all, your own perspective on, let's say, based on the jurisdictions where you have been active the most. But then I think it's interesting now that we have the US coming in and bringing their own regulatory approach to the digital asset space. Well, how does that impact other regulatory discussions in other jurisdictions? You want to get started, Ben?
Sure. I mean, if we're talking about sort of the influence that MiCA has had, the commissioner this morning called it the gold standard, right, for regulating CASP, and I think that's right. We've talked a lot today about the speed of crypto and how fast it evolves, and that's the challenge for legislators is the industry moves so fast and the consensus on how to regulate it moves so fast that there's a balance between if you wait too long, then your citizens don't have the right protections and the industry doesn't have the right clarity. But if you move too fast, then you need to then adjust later because as Tom put it earlier, the puck moves and you need to go where the puck's going, not where it was. So I think if you think back to pre-MiCA, back in sort of 2019, 2020, I was out in Singapore then. And Singapore introduced its crypto regulatory framework, and back then there were a few smaller places which had frameworks, but none of the big G20 countries had comprehensive frameworks. The US had its money transmission framework, so the crypto firms were regulated as money transmitters, and so when Singapore introduced its first crypto framework, it was part of a Payment Services Act. So they were overhauling their payment regulation, inspired to a large extent by the Payment Services Directive and the Money Directive. And they tacked crypto onto that. And it was all about AML. back then everybody was just obsessed with AML regulation. I mean, I think Peter mentioned this morning, some places still are, but back then there was only AML regulation. That's all it was. And then when FTX collapsed, people kind of suddenly remembered that actually consumer protection is important as well. And I think I've heard Peter Kersens before mention that it was quite fortunate actually that at that stage, the MiCA proposal was already out there. Because if it wasn't, there was a lot of pressure on we have to do something here. And if there hadn't been a sensible proposal already on the table, there were a lot of people back then who just wanted to ban crypto. And so I think MiCA did a great job of actually, in the historical context of when it came in, of being the first, big country, big area, comprehensive regulatory framework. I think it got most of it just about right. And I think it's a testament to the success of MiCA that its broad strokes have now become sort of the obvious way to regulate CASPs. But I guess, the caveat to that is that was the easy part. Centralized crypto intermediaries present many of the same risks as traditional finance. Centralized intermediaries, you're handing your assets over to a bunch of humans. You've got to trust those humans not to steal it or lose it or get hacked or go bankrupt. And so, the whole same risk, same rules mantra that you often actually hear anti-crypto people talk about, that actually makes sense for CASPs because there are the same risks. When you turn to DeFi, that's a different story. And so, as we've talked about in a few places here, DeFi potentially solve some of those issues in different ways. And so the risks aren't the same, and so the rules shouldn't be the same. But I think MiCA, when it came to CASPs, I think got the balance about right.
All right, thank you. And Lavan?
Yeah, I think it's an interesting one from the UK perspective because this discussion started at quite an interesting time following Brexit. So there was, whilst MiCA brought in a lot of, as Ben said, a lot of very sensible, broad brush, how do we regulate CASPs, how do we regulate the industry perspective. I remember a lot of my conversations at the beginning from the UK, talking to the Treasury, Bank of England, the FCA, was around what is MiCA, what is it doing, and what is it, how can we do things better? Where does it fall short? What's not good at it? What's good in it? And how can we make it better? That was the mentality that was there. So, if we were answering it head on, by the very nature that question was there, what's the starting point? It was MiCA. It was what has been done here and how do we kind of operate around that? But there was inherently a competitiveness angle that was there, and there continues to be, in how do we ensure that we fine-tune this to make sure that the UK is a jurisdiction that firms will want to move into. And so there was always these levels of divergence there in terms of wanting to ensure that there was also something to look at politically to say, yep, since leaving the EU, here is how we've diverged and here's what our own rulemaking can look like. But the reality of the matter is the UK is still designing where its rules are, and we're in a consultation period at the moment in terms of what the actual rules look like. We know broad brush, the kind of structure is being taken as crypto asset firms are going to be regulated through the Financial Services and Markets Act, so existing financial services legislation. But the rules in which they're going to be operating is slightly, it is to be seen. We're in a consultation phase. But I think what has been quite clear throughout this is that where MiCA had gone out, and it wasn't just going out with the legislation, it's going out and presenting that to a number of different jurisdictions or influencing IOSCO discussions in terms of ensuring that the crypto and digital assets work stream set out the standards that were very much in line with what MiCA set out to do. The way in which people viewed digital asset regulation was through the lens of what MiCA looks like. Obviously, it's difficult because this industry moves at such a pace that the types of activities that we see present day were not present at the time that MiCA was concluded or even when it was published. So there needs to be some movement from that. But I think broadly, as Ben says, much of the kind of main broad approaches that that jurisdictions are taking are very much based on what MiCA has set out.
All right, thank you, Lavan. Thank you all. So we're basically saying that the European Union always tried to have this first mover advantage, right? Now the question is, was that a real advantage, or as some people now are referring to, is the second mover advantage probably more advantageous, if that's a word? Or will it be then even a UK situation which is waiting even longer potentially to get a framework out, in the end be the one winning this sort of race because they are able to wait for everyone else and do things better? What do we think here? Who has this real advantage in the end?
I mean, there should be a second mover advantage, but the UK is not looking like it's going to take advantage of that at the moment. I mean, what do you think about the proposed holding limits on stablecoins, for example?
Yeah, exactly. I mean, I think it's quite an interesting one. It moved from second mover advantage to late mover advantage and potentially last mover advantage. So we'll see where we land on that. I think there are naturally loads of benefits. The industry develops over time, and there is the potential of being a second or late mover in the space to be able to pivot in the way in which you approach things. So you can get some easy wins by saying, look, we've got a comprehensive view around how we're going to be dealing with DeFi or staking, because those conversations were not really prevalent at the time that MiCA was being concluded. So easy wins in that late mover advantage space. But then there are other issues that are in place in relation to, as you say, the holding limits for stablecoins. Now, my personal opinion is I think that will fall away over discussion. Seeing the kind of pushback from industry, and there's been a lot of discussion on this with the Bank of England on the negative impacts that this could have in the industry. So I do think that there could be some movement away from it, but that does take away, regardless, the fact that we're having this conversation from those positives that the UK could have taken from being later to the game, and I think that is unfortunate. All those kind of benefits that we've got from saying we've been waiting, we've been watching and analysing the industry, and we're going to come out with something really good. The kind of the publication on the holding limits has taken away from that slightly.
Yeah, I mean, there's pros and cons to waiting, right? I mean, I do think that MiCA is an area where regulation was an unlock, because finance is already regulated, and because, as I said before, CASPs present many of the same risks as traditional financial intermediaries. If you don't regulate, then and you don't give the industry that clarity. I mean, and again, thinking back to pre-MiCA, other than thinking about AML and payments regulation, the other way that some jurisdictions were thinking of was just to apply traditional securities or financial markets rules to crypto, which doesn't work. You can't just take the old rules and try and force a new product into them. So in that sense, MiCA was, I think, an unlock. It allowed the industry to move forward. But there's a point at which then you go beyond that and you start to try and regulate maybe DeFi before there's really a consensus as to what DeFi regulation should look like. And if you go too far, then you risk strangling innovation.
And Chris, any thoughts on this question? And considering the US indeed at the same time was in a way waiting, probably for, as you described earlier, for a better political environment and climate to actually be able to pass some comprehensive legislation. But at the same time, you found yourself in this position, as I mentioned at the beginning, looking and asking and coming physically to Europe to understand how MiCA was going to look like. Well, has that had an influence into the thinking in the US? And now that you have something concrete on the line that is coming, how much is this going to be different from the approach taken by the European Union, for example?
Thanks. It certainly had an influence on how we view the legislative path we've taken. Can y'all not hear me?
Yeah, the volume here was a bit low, but I think you're better now. Try.
Okay. How about now?
Yeah, I think it's better. Yep.
Better?
Yep.
Okay, all right. I'm just going to plug on. No, I definitely think it's been influential in how we approach these topics. A couple of areas. One is the disclosures that MiCA require for digital asset issuers. How y'all have treated DeFi or not treated DeFi, I should say, has also been a subject of intense conversation in our negotiations and the precedent that y'all set with that. And the other areas, U.S. law is really weird. Under MiFID, and you have financial instruments, right? And they're neither like that's just it. In the U.S., we have this distinction between securities and commodities that has a whole line of like case law behind each, and we have to respect that. So a lot of the discussions we're having are focused on very esoteric discussions about what should be classified a security versus a commodity and what consumer disclosures need to accompany each. So that is where we're spending a lot of time. DeFi, I think there will be some DeFi language that will be under consideration at some point with respect to illicit finance. It's intended to be just only address the issues around DeFi that apply to centralized intermediaries, not kind of decentralized protocols. So I do think we're probably going to do a little bit more on DeFi than y'all did, but it's only going to be addressed to like the centralized intermediaries like Coinbase and Kraken. And the risk management for DeFi protocols. So we're not actually going to touch the protocols, but I think it's been influential with respect to the second mover advantage. Yeah, I also think that we do have a bit of an advantage going second. Just seeing how other jurisdictions are regulating or not regulating, and it's been helpful. But we just have to be mindful that it's very difficult to pass legislation, and this is probably the only bite at the apple the U.S. is going to get for 10 or 20 years. So, there's no pressure on me at all to get this right because we're only addressing a $3 trillion market, and we're not going to be able to come back to it for 10 or 20 years. So, there's a little bit of pressure on me and my boss at the moment, as you can imagine.
Well, then it's even more appreciated that you're taking such an early virtual participation in our summit, considering all the work that you're doing. So thanks a lot, Chris. And indeed, I think there is a lot that people are waiting to see, of course, from the US. I think what you mentioned also around the language that will probably be included on DeFi, that's also something very interesting. And that's maybe also something that will bring back potentially these questions in Europe, right? Because in Europe, as we said, we are not regulating DeFi, but at the same time, we still have to clearly understand what does it mean to be DeFi or to be fully decentralized in a way, right? So we all know that, of course, this question will come out again, and will be interesting then if some good, positive work will have been done in the United States around that questions on how to potentially regulate DeFi. That's maybe something that we can bring back to Europe then and try and introduce here. Any thoughts from the two of you on anything that Chris was mentioning, or any other aspects that we want to jump into and delve into in terms of the difference from the regulatory approaches?
Yeah, I think in terms of the differences on the regulatory approaches, I think is the interesting part in this, because so far in this discussion we've talked about more broadly what is the regulatory approach that's being taken. And there are slight differences in terms of the regulatory approach, but I think the more interesting side is where does each of those jurisdictions see this market going forward? Like how are they positioning themselves, and how easy is it to operate? So if I look at my practice at Hogan Lovells, the biggest issue that I have, obviously from the UK perspective, it's slightly different. There isn't a regime to be in at the moment. But if I look at it from the EU perspective, the biggest question that a lot of the firms ask me is, right, we're happy to comply with these regulatory requirements in place. It's quite lengthy, it's taking a long time, there are a lot of disclosures that need to be made. But then the ability to have access to a bank account and the rest of the ecosystem is a massive inhibiting factor, because the rest of the ecosystem is not there to be able to to unlock the potential of the community, of this sector. And I think that one of the things and obviously there's still a lot to be seen in terms of the SEC rules that take place from the US, but the kind of how the US has positioned itself and has pushed market participants, the ease of moving into it seemingly is something that it could be quite swift and quite quick and has the potential to scale a lot faster. I think the UK, therefore, sits really interestingly in the middle between the two, as it has done for a very long time, and has a great opportunity to be able to act as the kind of conduit between those two markets, but also learn from the quick adoption and the rules and the environment that needs to be in place in the UK for the sector to be able to develop. And that goes beyond just the regulatory regime and then absolutely everything else.
Yeah, I mean, I think one of the things that regulators have to wrestle with in this industry is that crypto is inherently global. And that is a difference from some traditional markets. You know, many traditional markets like securities are sort of national, but the reality of crypto is it is global, and you have to deal, I think, with that reality. And in the end, I think, you know, people have mentioned a couple of times things like equivalence regimes. You know, the reality is, you know, Europe's a big place. There's you know, there's a big population, but as a percentage of the global market, it's only, you know, in terms of trading volumes, it's probably 7%, something like that. And so, you know, there are debates around things like access to global liquidity. So if you try and segregate trading liquidity in any particular country or region, you know, we've seen examples of countries trying to do this, places like Korea. You get worse execution, you get worse pricing for your customers, and so the, you know, regulators, I think, have to deal with that, and there has to be some accommodation in the end between having local oversight. You know, obviously, the regulators in any given country want local oversight of the people established there and the people offering services to their citizens. But, you know, it's in the interest of those citizens to be able to participate in global trading, and it's the same with stablecoins and the, you know, the debates we're having around dual issuance and stuff like that. So, and I think, I mean, for example, criticize the UK for the stablecoin limits, which I think are absurd. But one of the things I think is interesting about the UK's proposal is they're talking about having a branch and subsidiary structure for global crypto exchanges, where there's a subsidiary which is the local regulated entity which faces the clients, but then the sort of the mothership, the global exchange, then has a branch. Which then gives the UK regulator some oversight over that. So I mean, that's one, I think, interesting way of doing it. The other way of doing it is having a formal equivalence regime, which we don't have under MiCA at the moment, and I think we're going to need that because, yeah, as I say, the reality is crypto is global, trading is global, and you have to balance the local consumer protection with the access to those benefits of global liquidity.
All right, thank you, Ben. I think maybe we jump on to what you're mentioning now and asking also to Lavan and Chris on this question of equivalence, right? Equivalence, as Ben just mentioned, is not something that is already introduced into MiCA, but is, of course, one of the key topics that we're dealing with also when looking at what's coming ahead, right? What is the future of this regulatory framework? And then, so the question is, was the potential of reaching equivalence with the European framework something that was ever or is being considered, for example, in the UK or in the United States? I don't know if...
I mean, I think the answer for the UK is yes. I mean, it has been made clear that equivalence is something that the UK would be willing to do. But we need to also remember that equivalence is inherently political. And so the option is there, the framework is there, the kind of the measures are in place to be there, but whether equivalence is granted or not is a political matter. And I think that goes more to the question of, well, you know, and we're kind of it dips into the previous point around the kind of views on which central banks and regulators view their risk appetite and how the kind of macroeconomic situation is in that jurisdiction as to whether to allow certain standards to track across as equivalent or not. But as a principle, yes, it is possible.
All right, thank you, Lavan. Chris, what about in the US?
I do think we want to provide a pathway for potential equivalence, between the United States and the European Union, the UK, and, other countries that have a robust regulatory framework. But as was just mentioned, whether to actually execute that or not is a fundamentally political question that I'll leave to my boss and the Treasury Department and President Trump. They'll have the final say on whether that's a good idea for the US or not. We certainly want to provide an option for that to occur, though.
That's good to hear at least. Just looking around, if anybody in the audience wants to ask any questions to our panelists, considering that we have, some very high-level speakers from different jurisdictions that can really share their insights and perspectives on how the regulatory discussions are going in different regions of the world. Don't be shy. Well, you are all shy today. Great. Well, we have someone who's not shy. He was trying to win a prize earlier in the quiz and is now trying to win another one by posing the best question of the summit. Let's hear it.
Oh, is that a thing? That's great to hear. I'm Lavan from BankSA. I have a question for all three of you. In one of the previous sessions, we talked about the issues we had within the interoperability of PSD2 and MiCA, where no action letter was necessary for short term and for the mid to long term, at least for the foreseeable future. Now we have a dual licensing regime. Do you see within your respective regulatory frameworks any other potential issues with regards to MiCA or within your jurisdictions, the relevant crypto regulation and other relevant frameworks that might have an intersection?
Interesting question then on the interplay of different regulatory frameworks, because I don't know, I might not need to tell anybody here on this panel, but maybe for the audience, what the question refers to is the fact that the MiCA regulation interacts with the payment services framework. I think it was mentioned also earlier. And so because of that, there will be potentially a need for crypto asset service providers to also obtain a secondary license as a payment service provider. Is there any similar problem or controversy in any of the jurisdictions that we're talking about today? Any considerations around double licensing, for example?
Well, one of the things in terms of the structure in which the UK has adopted digital asset regulation in the UK is to open up existing financial services legislation, and that's the entry point for firms to become regulated. It isn't another authorization itself, it's using the existing channels. There was a lot of pushback from industry kind of expressing frustration that actually what was needed at the time was a standalone bespoke regulation that applied to the crypto asset industry. But the UK wanted to ensure that there was consistency and a level playing field across everyone in the industry. If it's activities-based, if you are taking part in a financial activity, then you're captured within the Financial Services and Markets Act, and then there is, and then the activity that you're taking part in is regulated. And as a result of that, for a lot of the frustrations that people had beforehand, I think we have bypassed some of these dual authorization issues. Of course, for each of the activities that you take place, you need to get permissions for it. But fundamentally, as a FISMA authorized firm, it's one authorization that you get and then the permissions underneath for the activities that you're taking part in. So a little less complicated than some of the kind of considerations that we have, for example, in the EU.
Yeah, I mean, activities-based regulation makes obvious sense, right? It's a little bit unfortunate that we've got this overlap between PSD2 and MiCA. To me, it doesn't make a lot of sense. If you're holding stablecoins, you're custodying stablecoins for trading, it doesn't make a lot of sense to require a payments license for that. Whereas if you're using stablecoins for payments activities, well, then yes, then it does make sense. So I think that's where we'll end up in the EU.
And maybe just final question here that we got from Slido. Let's see if we can, we got two questions, I'm trying to merge them. So maybe let's try and understand, out of these jurisdictions that we've been talking about, is any specific regulatory framework out of these three, let's say, negatively affecting the region's competitiveness in any way, in terms of technologies compliance, or otherwise is actually negatively affecting individual freedoms, either from the state or from companies? I don't know if anybody has any thoughts on this. Like, do we see the European regime as negatively affecting, for example, the regional competitiveness, or do we believe that, for example, in the US and the UK or in Singapore, this might be the case?
So I think not yet. I think, as I said before, MiCA makes sense to regulate CASPs, which is great. We will negatively impact innovation and competitiveness if we go on and over-regulate DeFi.
Perfect, thank you. I don't know, Chris, if you want to say any last words before we thank you again for participating with us, or any final reminders in terms of what to our audience or what to expect from the United States?
No, I'll say that I think in the U.S. we've harmed ourselves by not having a regulatory framework around this market for way too long. And most specifically, we've harmed consumers. In the U.S., the lack of bankruptcy protection for customers of digital asset exchanges resulted in, like the customers of FTX and Celsius, for example, not recovering as much and as quickly as they would have had there been a bankruptcy regime and a statutory framework in place when FTX or Celsius collapsed. So the lack of regulations actually has harmed consumers in a really meaningful way. I'll say in the European Union, the stablecoin issuance cap, I'm still scratching my head around that. I understand where it came from.
We are too.
Yeah, the European Central Bank doesn't really like stablecoins, but that makes me scratch my head. But I'll end on a positive note and say keep an eye on the Senate Banking Committee in the next 2 weeks. There'll be some, hopefully, some fun legislation that we pass, hopefully with bipartisan support in the next few weeks. So keep an eye on that. And thanks, y'all, for the opportunity to join. I appreciate it.
Thank you so much for being with us. Thank you also for the reminder. Indeed, we will all keep an eye out on what happens in the next couple of weeks. I think on that note, we can close this panel. Thanks, everyone, for participating. Again, thanks to Chris for connecting so early. Thanks to our speakers.